last class, guys. Right? Okay. So first of all, we have discussed INDAS. What is INDAS? In the last class, we said what is INDAS? INDAS are nothing but a accounting standard which have been issued by the Ministry of Corporate Affairs as per Section 133 of Companies Act in consultation with ICI. What is Section 133? It is a section which is given under Companies Act. It is a section which provides the power to Ministry of Corporate Affairs. It is a section which provides the power to government authority to issue accounting standard in consultation with ICI. Right? Daksh has joined and he's saying good morning. Good morning, Daksh. So what is INDAS? It's nothing but a accounting standard issued by the Ministry of Corporate Affairs, which is a government body as per Section 133 of Companies Act in consultation with ICI. Then we said that if a country has to adopt, what are the two routes available? One is the adoption route. Second one is the convergence route. What is adoption route? Adoption route means that we adopt IFRS as it is without making any changes. That we adopt 100% IFRS, 100% International Accounting Standard issued by IASB as it is without making any changes. Right? And what is the convergence route? Convergence route means that we carry forward all the IFRS issued by International Accounting Board. We carry forward all the IS, International Accounting Standard issued by IASB Board, but we make certain changes, and those changes are called carve outs and carving. Right? So what is INDAS? Accounting standard issued by Ministry of Corporate Affairs in consultation with ICS per Section 133. And second, it is a part of the Companies Act. Third, it is also called converged IFRS. Right? We in the last session, we have talked about what is IFRS, what is International Accounting Standard. Earlier, there used to be a committee, International Accounting Standard Committee, who has issued International Accounting Standards. But in 2001, that committee has gone changed to International Accounting Standard Board, and that board started reviewing and revising the old standard, and they keep on issuing new standard in the form of IFRS. Right? So they were having a series like INDAS, IS1, IS2, IS3, and IFRS 1, IFRS 2, IFRS 3. Similarly, we have adopted in India INDAS 1, INDAS 2, INDAS 7, and so on. And in respect of IFRS 1, we have a series of INDAS 101, INDAS 102, and it is in the continuation. How many standards we are having in India in respect of INDAS? How many standards we are having in India in respect of INDAS? We are having 39 accounting standards which are applicable today. Right, which is applicable today. Till 31st March 2018, we were having 40 accounting standards. From 1st April 2018, we have issued a new standard called Revenue Recognition INDAS 115. Right, and two standard INDAS 11 and INDAS 18 gone away because they deals with the construction contract revenue and sale of goods and services revenue. Right, a new standard issued by the IASB and new standards have been carried forward in India in the form of INDAS 115. Similarly, as of 1st April 2019, what has happened? A new standard has come up, which is a lease accounting INDAS 116, and the old standard INDAS 17 has gone away, and we are having a total 39 accounting standards as of now. Right, as of now, starting from 1st April 2019, we are having 39 accounting standard, and going forward, we will be having 39 accounting standard itself. It may possible in the near future we will have one more standard in the form of INDAS 117, which is an insurance contract standard, which is applicable only for the insurance companies. Right, but as of now, that standard has not yet made mandatory. Right, not in the India itself, but also in the global, that standard which is IFRS 17 has not been made applicable. Right, so once that standard will come up, then INDAS will also get applicable to the insurance companies. Right, after that, what we have discussed INDAS roadmap. Right, INDAS roadmap. What is INDAS roadmap? Entire economy has been divided into three sectors. One is the companies, second one is the banks and NBFCs, and the third one is the insurance companies. MCA roadmap, they have divided all the companies into two parts: phase 1, phase 2. Phase 1, larger companies; phase 2, mediocre companies. What is phase 1? Any company having a net worth of 500 crores or more as of 31st March 15 or 16, then the company has to prepare INDAS financial statement for March 17. Any company means what? Public company, private company, listed company, unlisted company, and any company in the process of listing. That company is called a company. So any company having a net worth of 500 crores. People get confused, my dear friend, not in the CA final student, but also in the practical ground perspective. When we go in the market, when we deal with the clients, people get confused whether it is net worth or whether it is revenue. Remember, it is not revenue, it is net worth. Right? Net worth. So any company having a net worth of 500 crores or more, then INDAS is applicable to that company for the year ended 31st March 2017 in the phase 1. And once a company is covered, it holding, subsidiary, JV, associate, it will also covered in phase 1. Right? And what is the meaning of phase 1? 31st March 2017 with a comparative year 31st March 2016, and with the opening balance sheet 1st April 2015. That means for the first time, company will prepare 3 balance sheet, 2 P&L. Why 2 P&L? Because in these 3 dates, there are 2 periods. One is 15-16 and second one is 16-17. Right? Two cash flows, the statement of changes in equity. Three notes to accounts in respect of the balance sheet. Three notes to accounts and two notes to accounts for the P&L because we are preparing two P&L. Right? Then we need to give accounting policies, significant accounting policies for all the 3 years, and those significant accounting policies must be same in all the 3 years. Then we need to give the reconciliation, equity reconciliation and profit reconciliation. Equity reconciliation, opening date, that means transition date and comparative date. But P&L reconciliation only for the comparative date, because for the opening date, there is no Ind AS P&L. Right? So this is about phase one. Similarly to phase two, any company having a net worth of 250 crores or more, but less than 500 crores. Why 500 crores less than? Because it is already covered in phase one itself. Right? So if the company is covered in the phase two, what will happen? 31st March 2018, comparative March 17, opening 1st April 16. If there is any listed company which doesn't get covered in the phase one, it will automatically get covered in phase two. That means listed company will get covered either in the phase one or in the phase two, irrespective of the net worth. And if there is any holding subsidiary JV, then it is also applicable to that. Ind AS becomes also applicable to that. Right? What else we have discussed? We have discussed the RBI roadmap. Initially for the banks, RBI said Ind AS will be applicable for the year 31st March 19. Then it has been deferred by one more year. But as of today, RBI issued a notification that it will be deferred till the new notification to be issued by RBI. That means as of now, Ind AS is not applicable on the banks, but Ind AS is applicable on NBFCs. 31st March 19, first accounting period, and 31st March 20 for the phase two entities. Correct? Correct. IRDA, Insurance Regulatory Development and Authority, right? They have issued a notification for the applicability of Ind AS for the insurance companies. They said in the year 2020 that has been deferred 21, but as of now that has not been applicable. Right? So insurance companies, Ind AS is not applicable. And who all companies are there on which Ind AS is not applicable? Partnership firm, LLP, sole proprietorship, branch office, banks, insurance companies, trust society, cooperative society, and any company listed on a SME exchange, which is a smaller and mediocre exchange companies. Right? So any company which is listed on the SME exchange, Ind AS is not applicable to that company. Right, guys? This is what we have discussed in the last class, and we have also discussed the net worth. What is net worth? First of all, where it is defined? Is it defined under any standard? No, it is not defined under any standard. Sir, it is defined under section 2 of section 2 subsection 57 of the Companies Act. Right? It is defined under Companies Act. What it says: share capital. Share capital includes equity share capital and the preference share capital. Second, reserve and surplus. We need to take total reserve and surplus which is appearing on the face of the balance sheet. After that, we need to exclude amalgamation reserve. After that, we need to exclude revaluation reserve. After that, we need to exclude any miscellaneous expenditure which has not been written off. This net worth need to be tested as per the standalone financial statement of the company and not as per the consolidated financial statement. Right? And this net worth needs to be tested as at the year end as per audited financial statement of the company. Right? Not the unaudited financial statement. Sometimes people raise question that, sir, preference share capital may become a financial liability under Ind AS, right? We will explain when preferential capital will become a financial liability. Now the question arises, while computing the net worth, should we exclude preferential capital or should we include? Answer is very simple, guys. We are computing net worth for the purpose of checking whether it is applicable, whether Ind AS is applicable to that company or not. Once Ind AS is applicable, once the company will start preparing Ind AS, then we will say preference share capital is an equity or liability. But this net worth needs to be computed as per Indian GAAP signed financial. That means what is equity is equity, what is liability is liability. Whatever is stated, if the preferential capital has been stated as equity, it is always considered as equity for the purpose of computation of net worth for Ind AS checking. Right, guys? This is what we have discussed in the last class. So one person has raised one doubt. They are saying, sir, every country has different scenario on one point or other point international scenario taken. Then how a complete adoption of IFRS work? So it depends upon the company, Divya. It depends whether they adopt full set of financial statement, whether they don't want to adopt the full set of financial statement, they go for the convergence route. And very clearly, Divya, if you look at all the carve-outs which we have taken in India, it's not very huge. In most of the companies, those carve-outs are even not applicable. Right? I give you one small carve-out. Presentation change or the terminology change. For example, under IFRS, we say financial statement. Here we say balance sheet, P&L, notes to accounts. In the IFRS we call it as a asset and liability statement, income statement, but here we are saying balance sheet and P&L. This is not making any kind of significant change, right? But this is still a carve out, right? So it depends upon the company. Okay, Jitendra is saying, sir, what is NACAS? Jitendra is asking, sir, what is NACAS? NACAS. What is NACAS? Right? So NACAS is nothing but the full form of NACAS is National Advisory Committee. National Advisory Committee on Accounting Standard. Right? This is a government body, guys. So government has formed this body. Government has formed this body, right, to manage the affairs of to represent from the Ministry of Corporate Affairs, right? So this represents MCA, right? Because MCA has the power to issue the accounting standard in consultation with ICAI, right? And on the accounting standard, this is the committee. This committee regulates some more matters which is defined under the Companies Act, right? Jitendra, I hope this is clear. Okay, guys, one more thing. Since Jitendra has asked this question, who is NACAS? There is one committee called ITFG, right? There is one committee called ITFG. What is ITFG? ITFG is INDAS facilitation, INDAS transition facilitation group. This group is actually formed by ICAI to provide guidance on INDAS query raised by members, right? So this group has been actually formed by ICAI to provide the guidance on INDAS, right? When we have implemented INDAS for the first time in India, 2015 and 16, right? 16 and 17. More, there are lots of queries. There are unanswered queries. There are so many issues which has been raised in the industry, and those issues people were started raising those issues with ICAI. That was, this is the particular statement. How should I deal with this scenario? Then ICAI formed a group called ITFG, and this ITFG has dealt with more than 150 queries, in around 23 modules, right? So ICAI has developed this body. Now this body is no longer available. This group has been closed now, but they have dealt with more than 150 queries in the past, right? So you might have seen in Google, if you do the Google ITFG queries, you will get something. Okay, couple of doubts have been raised by the people. Okay, Prerna says, sir, are we also covering level 1, level 2, level 3 entities? Okay, level 1, level 2, level 3, right? Level 1, level 2, level 3 are available in IGAP and not in INDAS, right, Prerna? So these companies, the guidance is available under Indian GAAP, but under INDAS there is no such guidance. There is no level 1, level 2, level 3, right? There is a concept of level 1, level 2, level 3 under INDAS 113, which talks about the fair valuation. How to take the fair valuation if a company is in case of level 1 fair valuation, level 2 fair valuation, level 3 fair valuation. That is covered under INDAS 113. But entities level 1, level 2, level 3, there is no such concept under INDAS. I hope this is clear. Sai Ram has raised one point, sir. Amalgamation reserve means goodwill arising on purchase of company. Absolutely, but it's not actually a goodwill. Okay, let me write amalgamation reserve, right? Let's take one case study. There is a let's say this is A company. A company has acquired B company. A company has acquired company B, right? Now the purchase consideration is, let's say, 1 lakh rupees. This is scenario 1. Purchase consideration is 1 lakh rupees minus net asset of rupees, let's say, 60,000, right? So this 40,000 will be termed as goodwill. This 40,000 rupees will be termed as goodwill, guys. Now come to scenario number 2, and this will be recognized in asset side. Recognized in asset in balance sheet, right? Now let's take scenario number 2. I have acquired a company B whose purchase consideration is 1 lakh rupees, but I have acquired a net asset of rupees 1,20,000 rupees. That means it's a gain for me. That means this is a negative 20,000 rupees. This negative 20,000 rupees is nothing but a capital reserve or amalgamation reserve, right? Now how this is to be presented in the balance sheet? Scenario 1. if it is a case of goodwill, right? How do we present in my balance sheet? This is the balance sheet. How do I present? I will mention goodwill here of rupees 40,000, right? Goodwill here of rupees 40,000. What is the scenario number two? Scenario two, which is a capital reserve or amalgamation reserve. How should I present here? Let's say this is the balance sheet, right? This is share capital. This is reserve and surplus. So I may having a retained earning. I may having a retained earning here. I may having a security deposit, security premium, right? I may having a capital reserve, right? I may having a foreign currency reserve, right? This is my the total of reserve and surplus. So this is what this capital reserve is representing here. Let's say the capital reserve is representing acquisition or amalgamation reserve. Are we clear, Sairam? What is amalgamation reserve? Okay, guys. Now let's take some practical cases how the applicability of INDAS will work. Right? Let's take some practical cases of INDAS applicability. To holding company net worth 70, right? This company is having a holding company, H Limited, a net worth of, let's say, really. No subsidiaries also applicable. This is why we need to go as per the law. The law which has been drafted, that is a final. Law clearly says once a company is covered, its holding JV and subsidiary is covered. S1, request if you can go at